there's a lot of things that you showed us in that kind of confirm a little bit about some of the things that I look at as far as my pairs go. I only trade four pairs, and I need to move this up here. Okay. So, starting with the dollar, I just want to let you guys know, first and foremost, clear your minds, clear your thoughts, and just allow yourself to receive the information that's been given in the past hour and in the next couple minutes as we venture a little bit further into the markets and we take a look at what's what can happen and what the possibilities are. So again, I use a totally different analysis from uh, Modest. I use Fibonacci, I use levels, I use quarters theory. I've been studying quarters theory for quite some time. And just in case anybody doesn't know what quarters theory is, it's just simply the study of levels that are around numbers that are psychological levels that are major psychological levels for each and every pair. So starting with the dollar, basically what I look at is I start my time frame off on the weekly time frame, always on the weekly because I want to see the bigger picture. I want to see I value this time frame the most simply because I see so much more data, but it's not too much data for me. You know, there's a lot of traders who do, um, you know, they do intraday, they do, uh, you know, scalping and all that good jazz. I don't obviously have my quarters levels on right now, but that's a little bit different. Um, but to me, if I were to try to trade scalp or intraday, be difficult for me because there's so much data moving all over the place. So what I do is I go in my weekly and I look at, okay, what kind of trends do I have? What kind of channels are we trading in? Are there any specific patterns that I can apply to my chart that I know of? For an example, if I'm looking for a breakout pattern, okay, if I'm looking for a breakout pattern, normally what I'm going to look for is a channel. So from here, okay, there we go. We got our little thing there. I'm looking for, say, in the dollar, we've got a channel, a channel in the weekly where price has been trading for quite some time. Now it broke out to the top, but it also slammed back down. So since it slammed back down, what I did, now it looks to me in a downtrend. And as we can tell, at the 61.8, at 98.4, 0.04, we have just mad respect on the Fibonacci. The reason why I use Fibonacci's, honestly, is because subconsciously I've been using Fibonacci's from day one, and for some reason they tend to work the best for me. um Now, as far as looking for it, it just gives me the um it gives me confirmation for trends, basically, more or less. So as I begin to dissect the dollar, I had the same outlook as Modest. There's a couple of key things that I saw with the dollar, as far as the trend goes. So now there is this basic concept where we look at things like these gaps, right, where they're supposed to be filled. I will let you know that not every time I look at a gap, not every gap is going to be filled. Okay. So as we continue to dissect the dollar, what I saw was it respected the 61.8, continued down, respected the 38.2, respected even further. Now we do have a line of support right here, as you can tell, in the US dollar. Okay. Again, I trade the Euro USD, the USD JPY, the Euro, and the Bitcoin USD. Okay. not only do I just look at my technicals for confirmation, but I also go in and I look at my news. Okay. So for FOMC, for those of you who don't know FOMC, I had to go and do some research on this. Federal Open Market Committee. The basically what they do is they dictate monetary policy. And if you guys didn't see what happened on Eurod, I anticipated a move downwards at one point, and we're going to go back to the dollar here in a second. But I anticipated a movement downward, and it didn't happen. As a matter of fact, it moved upward. Not Eurod. I'm sorry, wrong one. Euro USD. Okay. So what happened was on the Euro USD, what happened is I anticipated a movement downward, right? A continuation downward. But what ended up happening is it continued up. And what happened was the Federal Open Market Committee had actually numbers that were hawkish. So what that means is that it wasn't in the favor of the dollar. So what I'm anticipating the dollar to continue to do is to make a continuation down towards the 81.7 level and the 84.72 level. Okay. And the reason why I say that is because I verify in my analysis a trend. I verify analysis in my trend. And this entire channel has been broken. I love channels. And the reason why I love channels is because they are so accurate when it comes to the breakout. I love breakout trades because they're so accurate. So with that being said, I don't really go into into super detail about candlestick analysis because I for some reason for me I have to be a little bit more simple, otherwise I might overwhelm myself. So now with the confirmation of FOMC, what happened with last week versus now, the breakout of this doesn't, I guess this doesn't really count because exactly what Modest was saying, stop hunt. Hey, guess what, guys? We're gonna go up in an uptrend. Haha. Yeah, right. See you later. Goodbye. And decided to form a new trend. So, with that being said, the new trend for me and my honest outlook for the dollar index is going to be a downtrend towards the negative 27 and the negative 41% levels. Those are my extensions. So moving on, let me take a look at these chats. What have you guys been saying in here? Hi, love you guys. Modest did a very great job. Okay, so moving on into one of my favorite pairs, personally, the USD JPY. Now, this is where I get my confirmation that FOMC was negative. Their statements about the monetary policy was negative or hawkish. Is the fact that we dropped. Okay, I've already established this is so weird how I did this reverse. I'm so dyslexic. You know how I did a reverse pattern, but that's part of my breakout trade too. It looks like a flag, but it's also part of my breakout trade. So as I dissected further into the market, I'm actually going to go ahead and go down to this daily real quick and delete this Fibonacci so you can see what actually no, this is fine. So from this Fibonacci that we already saw here previously, where this channel, it's almost the same thing. If you looked at the Euro USD, or not the Euro USD, I'm sorry. Go back. Okay, so if you looked at the USD JPY, look at the correlation. Look at the correlation. Just the correlation between the dollar index and the USD JPY. Isn't that crazy? Although that may be weekly, there's still some kind of resemblance in the daily. That's only a little bit more detail in the daily. So for me personally, what I'm still looking for are breakout trades. And as you can see right here, this whole triangle right here that I've been looking at has already been broken out of. But not only that, I used my Fibonacci retracement tool to figure out where are the levels, where the levels at. Okay. As you can see on the 61.8, which was one of my previous trades, I didn't really actually call this one out, but on my previous trades, I entered on the 111.20 level. Okay. Because I saw the 61.8 respected inside of this channel. I usually use my Fibonacci retracement tools inside of a channel because I want to know, okay, if it respects my Fibonacci inside the channel, where is it going to travel to? So it traveled and continued, and this is where my take profit was at the 109.16 level. This is where I find um, that long term in trades with the weekly and the daily are most respected between the 61.8 and the 38.2. Okay. So from here, what I was looking at after I exited all of these trades, after I had back tested numerous amounts of hours, just looking at what can this trade potentially do in the future. Okay. Now this is funny. You see this right back here? I'm going to go ahead and zoom back in. Actually, let's go to the weekly. No, I'm not going to go to the weekly. We're going to go straight back over to it. Hello. Okay. There's one gap here that I love seeing gaps. Gaps are some of my favorites. I love trading gaps because that means that we're going to go ahead and trade back down towards those gaps. But one thing that caught my attention the most, if I can just like scroll back to it and not, okay, where did it go? All right, so this right here, this gap. Do 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 do. Go ahead and put my clips over it. This gap meant a lot to me. Why? Because I really wanted to figure out what was going on during this time. Okay. This is back in 2014, of course. What I'm looking at is structure, more or less. I'm not looking at the news back then. Obviously, there was some kind of bullish news for USD, for the US dollar. There could have been new monetary policy. There could have been there could have been new trade deals, whatever. Let's go Donald Trump. Anyways, so from this here, reason why it was so important to me is because it never got filled. It never got filled. And it was such a huge impulse leg to the upside. And I definitely look for impulses inside channels. Okay. Inside breakout trades. Breakout trades are my favorite because for me personally, they're the most accurate. So as I zoom back out into the weekly, I'm going to go ahead and delete this right here. Okay. And delete this. Okay. So now that we have established where we know where market structure is, now that we know where the channel is, I found that once it broke out of the 108 level, this is where I called another trade. This is how I knew that it was going to continue to the downside. Okay, I go to my 4-hour. Come on, there we go. Okay, so as I went to the 4-hour, I just knew that it was going to come down, retest. Like Mata said, if you don't have a retest, you don't trade. You just simply don't trade because that can be a mad fake out to the upside. It could very well have been a mad fake out to the upside. Okay? So I found as soon as it retested, boom, I made a sell. And then I made another sell. But the next thing that I called was from right here, I knew from this point right here it was going to come around the 107 level. It never really did touch the 107 level. But the only reason why I knew it would do that, it goes actually like right around here. Come on. Come on, mouse. Don't toy with me. You notice something? So something crazy happened. Nothing really crazy, but my favorite thing to see is whenever the 61.8% mark is respected. Crazy, isn't it? So this is how I called some of the take profits, was using the Fibonacci retracement level. Now, granted, it could have been put in a different place, but I knew that it respected the 61.8 perfectly, and that's where, see how it closed below the 61.8. 1, 2, 3. Whew. 38.2. Another thing you should know, one thing you should know about the 61.8 is the impulse legs. Impulse legs. Now, the further it reaches, the further that it retraces from the original high, from, let's say, from say here, and it retraced down to the 61.8. See how it didn't fully come back up and touch entry, which was right up here. At the 61.8, retraced, boom, came back, retraced at the 38.2. Didn't really do much. That's okay. But we're still in the trade. We're still nowhere near our stop loss. So the next thing that I did was I watched for another touch to the 61.8 for, and this is whenever I called the next entry, which is right around it was right around 106.50. And the reason why it was around 106.50 was probably right around one of these highs, I think. Yeah, right around one of these highs. And this is where I called the 106.50 trade all the way down to the 105.47, 105, and I think it was 105.23, which was another level that we look for. So that's how I called those. Now, my market outlook overall for USD JPY is going to be continuously bearish. And the reason why is because of the FOMC outlook, because of the monetary policy outlook. I don't really know how to explain everything about it, but I'll go into the best detail that I can. So we go and look at, this is how I go and look at some of my trades. We go and look at USD JPY dollar falls below the 105 as, come on, don't do that. Stock markets turn red. Okay, that really doesn't matter to me. It says technically the pair is short-term bearish as long as it holds below the mentioned 105.25 region. I somewhat can disagree with some of that. Only the only reason why, and I don't really base my trades based off of this, whatever the heck FX Street says, but half the time FX Street does give me some good information. So let's go ahead and look at the fundamental overview. USD JPY pair sunk to 104.63, its lowest since November 2016, as risk aversion triggered late Thursday by escalating tensions between China and US over a trade war. So now we know why it sank. The trade war. There's a trade war between China and the US. Okay, plus the FOMC. Took its toll on worldwide equities, leading to a run to safety. Now, I love USD JPY because of the fact that it's a safe haven. It's a safe haven pair. The Japanese yen is always for investors, and this is a universal. This is just a universal concept. The Japanese yen is a safe haven just in case everything tends to go south in other markets. So, although trading below the former yearly low of 105.24 achieved last February, a light macroeconomic calendar has exacerbated the quietness, but the U.S. session will kick in with the release of February durable goods orders. This is probably a little bit older, but I'm still looking at the expected to bounce falling sharply in January later, followed by housing data. The figures aren't enough to set a trend, but could bring some action in the last day of the week. So this might be a little bit older news, but at the same time, it still says it's still up to date with the. Let me see. Where is this at? I don't know where it's at. Okay. Well, anyways, it's pretty accurate when it comes to the fundamentals. So that's where I really get my fundamentals for USDJPY. Okay. Now, going into knowing that this is a safe haven. If the US dollar ever goes south, or if the Euro USD goes south, guess what? You can always notice that with the Euro USD, you're going to see an uptrend to the upside with Euro USD. As you can tell, it's already in on the weekly, an uptrend. Now, I went ahead and drew on the monthly well, technically it's on the daily, it's on the weekly. Let's take a look at the weekly. So now let's look at the Fibonacci levels on the Euro USD. Like I said, for the USD JPY, this is where I find most of my trades are going to be successful. Whenever there's a little bit of chaos in the markets, because everybody tends to run to the Japanese yen or the Bitcoin. Bitcoin is also a safe haven currency as well. And I think Zach can probably do a little bit more clarity on that if I'm wrong. I hope I'm not wrong on that, but at the same time, that's just something that I've done some research on and I believe fully. So as we move a little bit further into the other pairs, my Euro USD chart. So what am I looking at? Devin, what am I looking at? Well, here's where we're at. So long term, we look at 1, 2, 3, 4, and a whole zone. Major psychological zone. This is what I trade off of. And please forgive me if I bounce around on this webinar because it's my first time presenting my ideas to anyone. I don't normally present my ideas on a daily constant basis or even a weekly basis. So if I do bounce around, I apologize. But anyways, where we're at with the Euro USD, we're at a major psychological level. Okay. We have found that there is a triple bottom on the Euro USD. Now, I'm not entirely sure what the news behind all of this was, but as you can see, it definitely bounced off of the 1.04427 price and made a continuation to the upside on the monthly. What I like to look at mostly are psychological, just where has price been the most? Where has price been the most? I'm seeing a continuation to the upside. And for me, I'm not going to give any long-term take profits or any type of trade idea just quite yet, because I want to see a couple more things confirm. And with that being said, going down to the weekly, what I saw was, let's go a little bit further. Okay, now we can see what I'm talking about. What I saw the most was we're just basically looking at another channel again. White, yellow. See how we're basically in another channel again? It's crazy how this works. But I guess I could call this, what we call this breakout trade, I would call this breakout trade technically bird's beak, kind of. I kind of give it its own name. But it's the reason why I like these so much is because when I look at it, I look for the amount of data points. I need I need a specific amount of data points, and I need at least 5 data points in order to confirm that. So I have 1, 2, 3, 4, 5, 6, 7. I have 6 and 7 data points inside of this. And normally for me personally, when I see 7 data points inside of a breakout trade, I just know that from that point that this breakout trade, I don't know for a fact, but more often than not, when I have 7 data points inside of a breakout trade, it's game over for me. I just know once it breaks out in a direction, it's heading in that direction, and it has an impulse leg almost every time. For me, it has an impulse leg every single time. 80%, 80%. I'll say about 70 to 80% of the time, that's when I see my impulse leg. Is when it comes out from, let me see, where's my drawing tool? I need a drawing tool. Okay, so my brush. So it can come out. Oh, hey, look, you can't even see my stuff. Let's make that, let's make that white. Okay. And then remove it. Oops, that's not what I meant to do. There we go. Okay. So say it were to break out of this specific level, right? Say if it were to break out of this. Oh, you know what? I'm just gonna use my mouse pad from now on. I don't like this. It's not working for me. Okay, let me see here. Remove. Okay. Now, say it were to break out here. Come up, down, retest. Boom. My retest right here. This is where I'm gonna buy every time. Right here in this retest. Because like Monda said, if you don't have a retest, you don't buy, because you can tell whether or not if it retests, if it's a fake out or if it's a stop hunt. Personally, I don't like stop hunts, and I want to know if it's going to be a stop hunt. So the way that I know that it's going to be either a stop hunt or a continuation is if it continues, if it does its retest and does its continuation. That, my friends, is how that's how I look at the market there. Okay. So my anticipation for Euro USD is a continuation due to the fact that the trade war is still ongoing with the U.S., and I don't see that letting up anytime soon. So we can see a continuation in USD JPY and a USD JPY trade to the downside continuation, and Euro USD upside continuation. But we want to wait for our technical analysis to be confirmed. Okay. Now, moving on to Euro AUD. From this trade, I had to take a moment, step back, and look at why did this trade not succeed for me. I kind of want to share what I was thinking through that process, what my thought process was whenever I lost on this trade. Now, was I mad? No, absolutely not. Because I know that if I'm mad at this trade, if I'm mad at any type of trade, I'm not a trader at all, because I have to have a level head. I have to come back and I have to look at my other pairs. I have more opportunities in this market to trade. Did I have risk? I have to look at it. Did I have proper risk management on this trade? Absolutely, I did. I risked only 2 to 3% of my account on this trade. That's all I did. Did I have a proper stop loss? Did I have a good risk reward ratio? Did I write down everything that I thought was, did I write down everything in accordance to my plan? Like, did I write down all of did I write down everything that was in my strategy? Did I write everything down? Basically, I did. And I thought with 4 to 5 confluences, not every trade is going to go in my way. It's not going to go in my direction, nor is it going to go in yours. Not every trade is going to go in the right direction that we wish. But the only thing that we can control as far as I'm concerned is how much we lose. So with this trade, what I looked at was I didn't take a minute to take a look at the bigger picture. I really didn't. And like Zach was saying, you know, you got to look at when you look at your trades, what is your expectation? What do you expect from the market? What do you expect from your what do you expect from your specific trading style? Okay. What exactly are you expecting from fundamentals? What, like, there's so many different expectations you need to write down. You got to consider all the expectations that you have for your trading style, the percentage that you wish to gain or that you're willing to risk in the market. So with that being said, Urod is kind of a newer pair for me. I don't really trade Urod very often, but the reason why is because it's in conjunction to an export. The Australian dollar is an export, I believe, or it may be an import. I may have that a little bit jumbled up. I have to do a little bit more research on that because I'm getting more used to the fundamentals now. And what drives these pairs the most. Okay. So looking at the fundamentals, what I did was I actually drew my Fibonacci's the wrong way. Here's what I did. I'm going to go ahead and erase this Fibonacci right here. What I did was that was harmonic pattern. I'll show that to you guys later. What I did was I drew my Fibonacci all the way down to here. I'm like, yeah, it's in an uptrend, something like that. And you know, I didn't really, no, I had it reversed. I'm sorry, my bad. Watch this. Beginner's mistake, basic mistake. Watch this. I did this. So I took my Fibonacci level and I drew it from down swing low to swing high. funny character, huh? so I had it from here up to here, and I was expecting it to touch this 38.2, right? And bounce downwards. That's where I got my last trade. Funny dingy little bird. Why would you do that? Basic little mistakes like that can get you in trouble in the market. But at the same time, if you have good risk reward ratio, it's okay. You learn. You just learn. You just learn from that. So my basic outlook for the Urod, and I'm not going to go into too much detail on Urod because I feel neutral about it. I don't feel any way, shape, form, or fashion to trade this at all. Now, for this harmonic pattern, you know, it's just I had a harmonic pattern that I had drawn up before I traded this one. And I also confirmed it with a harmonic scanner. So I took this trade, boom, up to the upside, and it was over a 300 pip rise. And it was beautiful. It was a beautiful trade. Now, going into my favorite pair of all time, and this is one that I like to study with Zach on a lot. I like to spend a lot of time on it because I'm a swing trader by heart. I love swing trading with every ounce of my being, simply because I like catching a lot of pips. I like seeing a high number of pips, and I can't wait to see a lot more pips coming up in the future. So basically, over the last 2 weeks, myself and Zachary, we looked at a couple of levels, and around the 9,000 and the 95 level. Our anticipation was the bounce to the downside. And I fully believe still that with my outlook on Bitcoin USD and the assistance of Zachary, I believe fully right now that Bitcoin USD is still going to continue in a downtrend. Reason why is because here's what we're looking at. On the daily, as you can see on the 38.2, highly respected level at $11,360 on Bitcoin USD. Highly respected level. Now, if you like trading MAs, moving averages, this is what I look for as far as the moving average. Now, moving average to me is a moving um, resistance, support and resistance. So uh, from here, what I'm going to anticipate for Bitcoin USD in the future is a continuation bearish in the touch to the 93.30 level as my moving average, my 50-day moving average moves closer to the 9300 level. So now this is kind of funny. I tried to draw a harmonic scanner on this, and I don't think that works very well for me on Bitcoin USD. I don't think drawing a big harmonic patterns on Bitcoin are, for me anyways, they don't work very well. But anyways, let's go ahead and dissect into this really quick, and then I'm going to let you guys go. Or we'll talk to Zach too, because I think Zach wants to talk a little bit. What have you guys been talking about in here? I get really curious. I love you guys. You guys are awesome. Yeah, you're right. After the 50th webinar, well, we're getting there. We're getting there. All right. So with the Bitcoin USD, let's go ahead and take a look into this really quick. So with my Fibonacci being drawn up, I love Fibonacci. I actually just bought the Carolyn Broden book. I think she's the most badass trader with Fibonacci's. So with this trade, like I said, we have been looking at this level right here, Zach and I, at the 9,500 level, and it did actually bounce from the 95 level. It did take itself from the 95 level down to around the 7,000 level a long time ago. Back in like the 15th. This is like right around where we were going to convention, actually. This is right around when convention was. So I want to show you something really quick. On that Sunday that I called a trade to the downside, what I was looking for, this candle was not here. So let's go ahead and drag this back here for a second. Okay. So what I was looking for was, okay, so I knew that this right here was just a huge level. I still believe fully in support in support and resistance levels in Bitcoin USD. In cryptocurrencies, there is still the same concept. Okay. Fibonacci's confirm all of that for me. You see this black line right here? Let me highlight that really quick. Okay. So that black line really actually kind of confirmed to me, now that it's white, actually confirmed to me my sell. Okay. What I looked for was I saw wick here, wick here. Like he said, liquidity. I don't really know much about the whole liquidity part, but what I do know is when I saw this open up, depending on whether or not it was going to pass this 23.6 or if it was going to pass the 93 or the 90.38 level, when it opened up to the downside, I don't know exactly how to explain how I knew that it was going down that way, but I think with a little bit of assistance from Zach, there could have been, I think, with a little bit of confirmation and some yeah, like I said, some help from Zach. That's really where I kind of found that it was going to move to the downside. Of course, my call. Let's go back here to my ideas really quick. Let me go back here. That's not. Oh nope, we go here. That's right. Take a look at it. What are you doing? Trading view. Crazy. Want to act all crazy here. Gonna go to my profile. Okay, so let me see here. So this is what really did it for me, I think. And this is that USD JPY trade that I called out. I'll show you that here in a second. So breaking down the breakout trade for the Bitcoin USD, this is actually, as a matter of fact, whenever I talk to Zach about it, got a little bit of confirmation on it. And so I just right off the 9145, I was just kind of exercising a little bit of what Zach was teaching me, and I was like, maybe we should try this. Maybe we should try using a little bit of breakout strategy on some cryptocurrency. And what do you know? Um, he helped me define my expectations on Bitcoin USD, as well as the you know time frame, as establishing the time frame that was the most valuable. And the time frames that were the most valuable to me were the weekly and the daily, because I had enough information on those time frames. I just had enough information and confirmation to know that from here down, it did drop and touch our first take profit at 83.25. Now we did close all the trades because I feel like we needed to. I feel like we needed to. After we hit take profit one, let's go ahead and reevaluate our position and reposition for another trade into Bitcoin USD. So with that being said, my favorite way of finding trades are breakout trades. Bird beak looks like an eagle. So with that being said, guys, does anybody have any questions as far as market structure, time frame? Does anybody have any questions on like Fibonacci, support, resistance, anything like that that I've been sharing with you guys so far? Everybody likes chicken nuggets because I like chicken nuggets. Do 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 do. Prince, what do you look at for fundamentals before you take a trade to confirm the trade you're going to take? Okay, so as Prince, to answer your question, um, what I look at most is monetary policy. I look for monetary policy, and the way that I look at that, ooh, question. Somebody has a question. Namaste, my friend. I love you. So I just go and look at monetary policy for USD JPY or for Euro USD. Like I'm looking at monetary policy overall in general for my trades. And I also go to, let me see here. I'm going to go ahead and just kind of like type in something for you guys. Forex Factory. You guys will probably be shown this a lot. So I'm going to go ahead and look at the calendar. Okay, so this is really where most of the where you're gonna get most of the action. This is really where you're gonna get most of like where you're gonna get your news from. US dollar, crude. Not very much coming to us this week for the US dollar. So maybe we can we can see what happens next. We can see what happens next. Is does that answer your question? Prince? Just looking at monetary policy, taking a look at the federal open markets committee, all that good jazz, and just listening to like Janet Yellen is really who drives the U.S. dollar the most. Do you look at monetary policy only on FX Street? If not, which is the most trusted site that you use? What do you look at specifically on monetary policy? Okay, so like I said, with what I do as I kind of like go, I'm gonna go like in here really quick. Hey, harmonic scanner. So I'm gonna go look at what is Janet Yellen's talking about, right? So latest press, I'll go and like listen to some of Janet Yellen's Janet Yellen is the economist. She's the chief economist for the United States, by the way. Um, she's the chair board of governors for the Federal Reserve System, by the way. So that's why she's so important. That's why when I listen to her, that's so important to listen to her because whatever she says basically goes for the US dollar. Okay, so monetary policy, look at interest rates, for example. So if I say rate hikes, when is the rate hike going to happen? Well, let's take a look. So the Federal Reserve raises rates for the sixth time since the policymaking Federal Open Market Committee began raising rates off near zero in December 2015. The economic outlook has strengthened in recent months, the committee says in its post-meeting statement. So I I also go ahead and just like read all of these articles. I go through and like read all of these articles. I don't know why it's so interesting to me, but it is. It really is. And I look at, is it going to be hawkish or dovish? One thing I would do is write that down. Uh, write down what is the definition of hawkish and dovish news is. If you're a if you're not a fundamental trader and you want to look into fundamentals, I would write that down and take a look at that. Yeah, I would take a look at those definitions. But the monetary policy, also look at housing sales, jobless claims, job claims, all of those different things. They all take into consideration for every currency, especially for the US dollar. For me, oops, I don't need you to be talking while I'm talking. But those are all things to take into consideration when looking at the US dollar. Okay. Dovish, hawks and doves. Yeah, hawks and doves. Right, Pablo. So look for hawkish. Hawkish is negative. Hawkish is negative. Let's go ahead and look at this really quick. Hawkish meaning versus dovish. Let's look at that. I don't know if I want to like go into like NetFind or anything. Nope, that's not what I wanted to do. Okay, here we go. Okay, so what does dovish mean? Monetary policy and dovish. It means that the policymakers favor looser, more accommodating policies because they want to stimulate growth in economy. Um, the folks at the Federal Reserve accomplish this primarily by lowering interest rates. When mortgage rates are lower, it becomes cheaper to finance a house. When auto loan rates are lower, it becomes cheaper to finance a car. That's what dovish means in monetary policy. Policy. Huh. Why you need hawkish policy? Okay. The problem with the good times is that there that is too much good times can be a bad thing. The reason why is because it's almost like a bubble. If you look at like same thing that happened in like 2008 when we had the housing bubble crash, a lot of loans were being loaned out to people who probably shouldn't have been loaned out to, and a lot of people defaulted on their loans, and that resulted in um, you know stricter lending policies for uh, the just for U.S. banks. A lot of U.S. banks went bankrupt. A lot of banks actually lost their banks, never to return as a bank again. And a lot of banks were actually bailed out from the government, and that's part of your monetary. That's a big portion and reason um, to your monetary policy, because of all of those different things that have happened in the past. They become stricter and stricter and stricter on monetary policy, because loans, believe it or not, are traded on the stock market. Loans, let me see, loans, treasuries, bonds, stock, yield, something else that said yield. I can't remember. CDs. There's loans are also things that can be traded. So you also have to take into consideration when financing when something's being financed. The government, every economy finances for some sort of good. And now, is it always good? No. Is it always bad? Not. It's not always good. It's not always bad. But at the same time, that just in summarized in synopsis, was the reason why I kind of look at monetary policy. And a lot of people would go to venture to say that monetary policy, when they come out, is just another reason for the big money to move it in a direction. Which, yes, it is. It's a hidden. It is a hidden. It's kind of like a hidden agenda. Why is this in the way? It's kind of like, yeah, it's kind of like a hidden agenda. But with that being said, guys, um, Devin rambles on a little bit about, hey, did the market open? No, it didn't. Yes, it did. No, it didn't. I'm being doofus. Anyways, so that being said, guys, if you guys have any questions, feel free to let me know, because I think we've been on this webinar for about 2 hours. I hope you guys got some kind of value out of the out of this here, what you may call it, webinar, and you guys kind of like dive in a little bit deeper into the minds of modest of one person who I have the utmost respect for. I've been kind of talking with him a lot about um, just trading in general, talking about his strategy with my strategy, and just getting on the charts. And I fully believe that everything is intertwined in everything happens for a reason. And him and I are, he's just a great guy. He's just, really good to work with, especially in the markets. And I feel like our analysis somewhat line up. Um, and that was the reason why I said that our analysis are somewhat similar. Yet his is a little bit more detailed, mine's a little bit more broad in spectrum, and he covers things that I can't. And it's beautiful that he can do that, because there are a lot of things that um, I didn't know. There's a lot of things that I didn't know that he knew, which was beautiful. So with that being said, guys, is there anybody else on here who, if you guys have any questions, maybe I can answer them? What am I talking about? What do you mean, Prince? What are you asking? Who? Modest Phillips, the guy who was just on here explaining explaining the Elliott waves. Him and I were talking, I think it was almost 2 months ago, actually, talking about charts and whatnot. So it was fun to jump on charts with him. With that being said, I think this can now be turned over to the host, the original host, which is Zachary Hogan. Zach, do you want the webinar now? I don't know if he's on here or not. Or Jordan Morgan. Hey, I love you guys. Yes, sir.